Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Herd over here, he's back, and you got Lanny, and we are the Dividend Diplomats ready to bring you another dividend stock analysis video today.
So you know the drill, everybody. Smash that subscribe button, give us a thumbs up. We've appreciated everything you guys have done for us so far as our YouTube channel continues to grow. We want to continue bringing you some dividend investing news and stuff every week, so please help us out and grow that channel.
And today's video is going to focus on a lot of requests. You know, there's been so many in the comments asking for this specific monthly dividend paying stock. And this dividend stock yields a blistering 7+%. So this goes out to you. This goes out to the millions and millions of dividend investors out there that have been wanting to see the dividend stock analysis on Main Street Capital.
Our ticker symbol is MAIN, M-A-I-N. And to be completely honest with you, we are very pumped to do this analysis because we hear the news. You guys want to see this. We've just never actually really taken the time to start peeling back the layers and looking into Main Capital to see if they are that perfect undervalued dividend stock to buy. So what Lanny and I did, we rolled up our sleeves, we put some research together, and we're going to talk to you about Main, talk about their portfolio, and then we are going to go through the current stock metrics to let you know, are they that undervalued dividend stock to buy?
Now, for those that don't know Main Street Capital, they're an investment firm with over 175 and I believe 180 companies, Bert?
Yeah, the portfolio continues to grow, and based on their website, they are at 180 right now. With it, though, they have put a lot of money into these 180 companies. They've invested over $4 billion in these companies. So they aren't some small mom and pop investment shop here. They aren't the Dividend Diplomat Investment Corp here. They are Main Street Capital, putting a ton of money to work with over $4 billion of assets under their portfolio.
And the companies that they like to buy and put into their portfolio are those lower to middle market companies. We're talking companies that make revenues upwards up to $150 million per year. And what they're involved with is, buyback, buyout opportunities, recaps, and some sort of package up a deal with a company to somehow squeeze out more growth by using maybe some back operations to create further synergies and to really unlock more revenue for those companies.
Yeah, and some of the names they obviously own a lot of companies. We'll put a link to their full investment portfolio in the description so you can see if you know some of the names. But some of the big ones that jumped out to us were Affinity, Ameritech, Yellow Cab, and Phantom Fireworks.
Bert's favorite.
Yeah, we all see those billboards right around the 4th of July of come buy your Phantom Fireworks here.
Bert's the mascot for Phantom Fireworks.
I am. I put the purple hood on over. You can't see my face. See those eyes coming through?
July 4th is not only potentially his birthday, but it's his busiest time of the year.
Yeah, it is my birthday. And hey, you know what? I just got to peddle some fireworks out through Phantom Fireworks.
That purple cloak.
Yeah, I look good in purple. What can I say?
He auditioned for the movie It, but didn't get it.
Maybe on the next round. It 3, maybe. I'll see if I can sneak into that role.
But you're here because you're an investor, a dividend investor, and really want to know about this 7+% dividend yielding investment management firm. This company, as I said, pays you a dividend payment each and every single month. Now, Bert, tell me why that's a fun fact.
Because who wouldn't want to get paid on a monthly basis? Let's be real. You get a dividend check once a month. But what's cool about that is you get your payment. If you're dripping, you get more shares earlier.
That's the key piece.
And when you get more shares, your dividend income increases. You get more dividend income, so that next dividend's slightly higher. So if you can get it monthly and start that drip, start that dividend snowball earlier and earlier, the better.
It's all about the drip, baby. Now, with Main, they currently trade over $32 per share. So that's going to be the stock price we're going to use throughout the Dividend Diplomat stock screener analysis here. And again, we focus on 3 simple dividend stock metrics. 1 being the price to earnings ratio. 2 being that dividend payout ratio, preferably in the 40 to 60% perfect payout range. And then that dividend growth and dividend growth rate. And then lastly, we'll talk about the yield, especially here because that yield is a handsome one for you shareholders out there.
Yeah, we are very excited to start peeling it back. So we've got the numbers. Let's get rolling. Yeah, let's hook this one in, Lanny. Let's dive in. So metric number one, that price to earnings ratio. We always compare the price to earnings ratio to the broader market. Currently, the market has been trading in between 35 and 40 times earnings, which is just insane. So it's not going to be a very high hurdle to cross to beat this one. So you take that $32.33 per share price that Lanny mentioned earlier, you divide it by the forward average analyst earnings of $2.19, and you get a price to earnings ratio of 14.7. So currently that's a huge discount compared to the broader market.
In line with JP Morgan though.
Yeah, no kidding. So interesting. Big, massive bank that we covered and talked about in our last video.
Where it's giving them the nooks right here.
Yeah, and then you have Maine, which has a very similar price to earnings ratio. Interesting.
But let's look at that second dividend stock metric, the dividend payout ratio.
You know what, Lanny? Let's do it. Take it away.
So again, this is all about the safety in the dividend. This is where you look at how much do they pay out of their earnings. Preferably, you want something that's below 100%. The reason why I'm saying that is because Main Street pays a dividend of $2.46 per share.
Wait a second.
Were those expectations?
Wait a second.
Yeah.
I think I said last time the earnings were $2.19 per share.
Do they pay out more than what they earned?
I think so, Lanny. So what does that mean for the dividend payout perspective?
Finkel is Einhorn.
Einhorn is Finkel.
So they pay out more than what they earned, which is absolutely not what you want as an investor. Now, I know 2020 was a troubling year, but again, these are future expectations, and they're expecting lower earnings than what they currently pay out. Now, that's a red flag right now to me.
Yeah, I think so. That's a big red flag too. And now if we just quickly slide into the third metric, because I think this is an important point here, because you kind of see how this one plays out in the dividend growth history. From 2011 was their first dividend increase from their earnings recently. They increased their dividend through 2019. However, in 2020, while they still paid a dividend, it was slightly lower than what they paid out in 2019, so they didn't increase their dividend. The payout was slightly lower on a year-over-year basis, and they haven't increased their dividend yet once again in 2021 for the first quarter.
Why was 2020 lower than 2019?
Which is understandable. It's a great point though, Lanny. Yeah, that's because they didn't pay that end of the year special dividend that they had.
What was that 5-year growth rate on average?
Yeah, and their dividend growth rate's actually pretty interesting because of how they structure their dividend payout. They
sprinkle in like a special dividend almost every other quarter.
Yeah, they're increasing that core dividend about a half a penny. And then as Lanny said, they sprinkle in that special dividend here or there. So that gives you a dividend growth rate of probably about 2 to 3%.
Then let's turn the page into the dividend yield. At a payout of $2.46 over that $32.33, that's giving you that blistering 7.6% right now, which obviously is more than 10 times your high yield savings account, is more than 3 times most dividend companies that pay out on average. However, the big red flag though, with the payout ratio above 100%, that shows that it is just really not sustainable. And I think Main Street, again, if you're an investor out there, my concern is I'm not sleeping well at night right now.
No, I'm definitely not either. That is a very high dividend payout ratio, and with a high yield like that, I wouldn't be that comfortable sitting there. I would be looking to see, is this dividend sustainable, or will we see it potentially be reduced down the road?
Because they don't have the longest track record in the book, Main Street Capital, there is a chance, there is a risk that they will cut their dividend. If you actually rewind the tape, you may not see that was what their payout ratio has historically been. I mean, a dividend that goes over 100% for multiple quarters definitely stands a risk of a dividend cut. And I've seen that in my lifetime many times. Yeah,
and they've already stopped paying those special dividends that they sprinkled in there. They haven't paid them since 2019. In 2019, they paid one in June, they paid one in December. They didn't pay any in 2020, and it doesn't look like they've announced any yet for 2021, but I wouldn't expect them to, especially not with that high payout ratio.
So I know it sounds doom and gloom here on the video, but it's not all that. Again, they did show a track record of growing their dividend. They do have a low price to earnings, multiple. However, as a dividend investor, focused not on the now, but focused on the 5, 10, 20, 30 years of my life going forward, I'm looking for that sustainable dividend growth. And right now, I can't say that for Main Street Capital.
Yeah, I have nothing else I can really say. I think it's an excellent way to state what we're all thinking here, Lanny. So please let us know in the comment section what you think of Main Street Capital. Are you an investor yourself?
Are you going to buy?
No, I'm not going to buy. I said I agree with Lanny. Lanny's not buying. I'm not buying.
Bert's saying rest.
I was trying to sneak past that by getting you to leave us comments, but Lanny wrote me back in and made me take a hard stance on it. So there you have it. Yeah, so anyways, now please leave us your comments below on what you think of Main Street Capital, and if you're investing, if you're buying. We'd love to hear your thoughts, and have you been a happy shareholder if you've owned them for a while?
And again, give us a thumbs up if you like the video, subscribe to our channel. We wanted to give you that Main Street dividend stock analysis that you've been asking for, and we brought it. And we're not always going to give you good analysis. We're not going to give you what you want to hear. We're going to give you the way that we see it.
Yeah, we call it how it is because that's what you need as an investor. You need somebody to just look at the cold hard facts, and the numbers don't lie.
And call a strike when it's down the middle.
I hope that umpire's calling a strike when it's down the middle.
Again, this is Bert and Lanny from the Dividend Diplomats.
Over and out.